Hey, welcome back everyone. This is Uncle Frank and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, let's get ready for next week by taking a quick look back, starting with this piece from Wall Street Breakfast. Stock indexes fell slightly on Friday, but still finished higher for the week after U.S. non-farm payrolls rose much more than expected in May, dimming hopes for interest rate cuts anytime soon. You see, this is my problem with Seeking Alpha. If you're going to report that non-farm payrolls are up, why fail to mention what the expectations were? They were expecting 185,000, guys. They got 272. Now can you see why that's a problem? Employers added 272,000 new jobs, while average hourly earnings over the past 12 months ticked higher after 3 straight monthly declines. U.S. Treasury sold off. Bonds lower, yields higher, guys, and the dollar strengthened on the news, prompting traders to dial back their expectations for how much the Fed might cut rates from earlier this week when data on manufacturing and job openings came in softer than expected. So Friday's employment numbers kind of ruined the party, right? The jobs report followed Thursday's rate cut from the European Central Bank, its first since 2019. The Fed will offer its decision on rates next week after its June 11 and 12 policy meeting. All 3 major stock market indexes posted a winning week, with the S&P ending 1.3% higher, the Dow 0.3% higher, and the NASDAQ closing up 2.4%. Chipmaker and AI favorite NVIDIA fell slightly on Friday, but ended the week up 10%, setting a new record high on Thursday after topping a $3 trillion market value for the first time on Wednesday. So the bottom line here is if we get a rate cut this coming week, it'll be a huge surprise because the data has reduced the chances of that. Okay, guys, pay attention. This could be nothing. This could spark a sell-off in the Mag 7, which could spark a shit show in the entire market. The U.S. Department of Justice and the Federal Trade Commission are set to launch an antitrust probe into Microsoft, OpenAI, and NVIDIA's market power in the AI sector. The DOJ-FTC agreement states that the DOJ will probe NVIDIA, while the FTC will handle Microsoft and OpenAI. I wish they would probe a certain hedge fund that also operates as a dark pool that simultaneously operates as a market maker. I know that would tickle Donahue George, wouldn't it? Haha, got another one for you guys. A former Allianz SE hedge fund manager charged with fraud over billions of dollars in investor losses pleaded guilty to providing altered documents to hide the riskiness of the fund's investments 2 years after a unit of the company agreed to pay $5.8 billion in penalties. Can you say securities sold yet not purchased or unrealized losses? MicroStrategy short sellers waver as stock price soars. MicroStrategy currently has $6.9 billion in major short positions, with 18 of these listed on Fintel's The Big Shorts list, which tracks the largest short positions disclosed to the SEC. The largest individual short position stands at approximately $2.4 billion, making it the 27th largest net short position among institutions. Despite holding significant short positions against Michael Saylor's MicroStrategy, institutional investors are showing signs of retreat as the stock price has nearly tripled over the past 6 months. In the 27th spot on that list, Shaolin Capital Management. At the 47th spot, Citadel. Now, guys, this hit piece in particular is from a guy that's no lightweight, and I'm not referring to his pear-shaped physique. This one is from Louis Navellier himself. This one actually sounds like someone called him and asked him to do a hit piece, right? Sorry, apes. Expect an infuriating ending to the AMC stock saga. Much like a bad movie, you'll be sorry for wasting your time with AMC stock. AMC is shifting back to its fundamentals. This does not bode well for existing shareholders, as the questionable chances for a continued post-COVID rebound point to lower prices ahead. Much like a bad movie, when the end credits roll, investors will regret wasting their time with AMC stock. Now, this guy actually says the following in this article: the verdict: until AMC pursues another way out, stay out of its way. Having said all this, there may be an alternate path for AMC to take that could enable shares to make a memeless recovery. You see, that's what this article is really about. He hates meme stocks. He hates when stocks go up because shorts get caught over their skis. He can only endorse earnings-driven rallies. He doesn't care about naked shorting, cheating by the hedgies or market makers, spoofing, layering, dark pool abuse, algo abuse, misusing the LULD halt system. So he writes hit pieces against a 100-year-old American company instead of addressing the real problems, right? So he goes on. That would be a situation where AMC begins using its cash position to diversify out of the movie theater business and transform into a totally different business entirely. No mention of our new merchandising business that is thriving. No mention of our new film distribution business. Taylor Swift, Beyonce, he's never heard of them. No mention of our new retail popcorn business featured at Walmart and other retailers. I don't know if you've noticed, Lewis, but this past third quarter was our best in our 100-plus year history, and that includes the pandemic. The strike is over, and I expect we will recover by year end. Not financial advice or advisor. If it's okay with you, we're going to keep our legacy business and build new revenue streams on top of that. It's not our fault you don't go to the movies or can't fit in our recliners. Get your head out of your ass if you're going to write hit pieces on us, Lewis. Before we move on to next week, let's talk about Roaring Kitty and his big bets on GameStop. We all have very different and strong opinions about this, so Uncle Frank will jump in and give you mine. Shout out to Callie Brobear for calling the Ryan Cohen ATM stock sale on GME. Let's begin our analysis by reviewing price action on the 5-minute chart. Huge customary crime candles, pre-market and aftermarket. You can see the arrows I stuck in there. The aftermarket one flashed to 63.87. Completely normal, nothing to see here. If you're in meme stocks, that is. No investigation forthcoming, we know. GME got as high as 48 early on and was pounded down to a low of 26.12 before closing at 28.22. Shedding 18.33 or 39.38%. After hours, it gave up another $1.06 or 3.76% to finish the session at 27.16. And what about dark pool activity? Why even have an exchange at this point? Only one of every 10 shares traded on GME were executed on the exchange it's listed on. Interesting note, at the time of this recording, cost to borrow has doubled from 3.83% to 8.8%, with 85,000 shares available to lend and short. And would you look at that halt history from Friday? How many did you see before you lost count? I see 17 in one day, all for our protection, I'm sure. Or are these designed to protect Wall Street through price suppression and momentum dampening? That's what they use the dark pools for nowadays. No comment from regulators, no inquiry, no investigations. Let's proceed. Welcome to Halt City. Hey, just for fun, let me remind you of who exactly sits on the Limit Up, Limit Down Advisory Committee. Goldman Sachs? Citadel? Virtu, Oh, we feel much better now. This explains a lot. We got a fox watching the chickens thing going on here. Or should I say snakes? Now back to GameStop. Here's a tweet from Friday, Ross Gerber. GameStop now plunging 40% today. At some point, people will realize they are getting worked over by GameStop and Ryan Cohen. This pump has allowed GME to dump 120 million shares on the public. No question, they wouldn't have been able to do this without the kitty. Okay, he's entitled to his opinion. And one criticism I would add, one thing I didn't like about Roaring Kitty's big return on Monday, I would have preferred a Friday, like his YouTube appearance. Why? Because if he would have tweeted on Friday, options expiration day, during market hours, after being gone for 3 years, that would have had maximum impact on our enemies. Am I right? He came back on a Monday, May 13th. Now, I'm not saying he's working with our enemies or anything, but if he really wanted to clobber them, he would have returned on a Friday before the bell. Am I wrong? Do you remember Monday, May 13th? Here's the headline from Reuters. GameStop soars as flag bearer Roaring Kitty resurfaces, sparks meme stock rally. Now here's my take. GameStop is sitting on between $1 to $2 billion in cash. Ryan Cohen doesn't take a salary. He's not Adam Aaron. Ryan Cohen actually buys the stock. Again, not Adam Aaron. Ryan Cohen founded Chewy, the largest online retailer of its kind in the world. Maybe he could do it again. Ryan has had lots of time to come up with a new business, an acquisition. And I can promise you one thing. When you're sitting on over $1 billion in cash, the business plans get delivered to your desk every day. And after Friday's dilution, he certainly has the money. Roaring Kitty discloses his position, stock, options, and cash. I would have redacted the cash part, but maybe he did that on purpose. He acknowledges that this is all his money. He's not working with anyone. He acknowledges what E-Trade did to him, putting him on Front Street. He doesn't mention his wife at Goldman Sachs, which kind of disappointed me. He says he has a feeling about the stock, what, a half dozen times? I've got a feeling. I just got a feeling. We can also see he doesn't have enough cash to exercise all those options, right? He could go borrow money for that. He could short GME, but that's not his MO. So is he hinting he believes something will happen before his expiration date, which is June 21st? That may solve his problem. There's only one event between now and expiration I can see, and that's Tuesday, June 11th, earnings day. Do we have an announcement forthcoming, or will it take more years to modify this company's business model? The legacy business seems stable. Their losses narrowed. But everyone agrees they need a new business line or acquisition, something. Dilution is only good if you do something good with the money, right? Paying off or paying down debt or investing in something new, right? Does Ryan already have a deal in hand? I guess we'll find out shortly. This is not investment advice. I'm not an investment advisor. I will never tell you to buy, sell, or hold any stock or security. But I bought the dip on GME Friday, and I'm in just in case. So then Martin Shkreli chimes in. It's fine to bet on management, but why would you pay a premium for that? Every investment is a bet on management. A reply from Mad Dog Capital. Why the short-dated calls if this is just, in caps, a long-term bet on management? Shkreli's response, good question. Now, Mad Dog is making my point. Okay? These calls expire. They're deep in the money, but these calls expire on Friday the 21st, 2 weeks from now. This is not a long-term bet, is it? Okay, so Monday, Tuesday, we don't have shit scheduled, and the market will probably be quiet awaiting the Fed's rate decision on Wednesday, right? But Tuesday, June 11th, the FOMC meeting begins. And of course, after the bell, we get the GME earnings. That report will be for the fiscal quarter ending April 2024. Now, Wednesday, June 12th, big day. 8:30 a.m. Eastern Time, CPI, Consumer Price Index. 2 p.m., we'll get the minutes from the Fed's May FOMC meeting. And of course, the FOMC rate decision. I don't expect a cut, but the comments are going to be very important, right? Okay, so Thursday, June 13th, 8:30 a.m. Eastern Time, PPI, Producer Price Index. Next week, June 18th, 8:30 a.m., U.S. retail sales. This one, should be important. They're going to want to see the consumer spending slow, right? Then Thursday, June 20th, 8:30 a.m., initial jobless claims. This one will be important this time due to the fact the last employment news we got from this past Friday was crazy, right? And then Friday, June 21st, 9:45 a.m., we'll see S&P Flash, services, and manufacturing PMI, and of course, Roaring Kitty's options expire. So we can agree this 2-week time window would be a great landing strip for a swan, right? So buckle up, Buttercup. Anything could happen. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.